In the high-stakes world of corporate crypto, most companies tend to dip their toes in, right? They're cautious. Well, today, we're looking at a company that didn't just dip its toes in, it did a full-on cannonball with a bet so massive it could completely reshape its future and honestly, maybe the whole crypto landscape along with it.
So let's just start with a number that's guaranteed to get your attention. $201 million. That's the value of a crypto purchase that was made, get this, in a single day.
And we're not talking about some big hedge fund that's just diversifying its portfolio. Nope. This is one single company, BitMine Immersion Technologies, essentially tying its entire corporate fate to the world's second biggest cryptocurrency, Ethereum. So, you got to ask the question, right? Is this some kind of brilliant strategic move that's going to pay off in a huge way? Or is this just a nine-figure gamble on one of the most volatile assets on the entire planet?
Okay, let's dive in and really break down this absolutely monumental purchase. Because to even begin to understand the strategy here, we have to get the facts straight first.
So here are the details. The company is BitMine. They just scooped up nearly 68,000 Ether, worth about 201 million bucks, all in one go. This single purchase brings their total corporate stash to an absolutely staggering 4.1 million ETH. But why? I mean, why would you accumulate so much of one single asset? This isn't just random buying. This is all part of a very deliberate and, frankly, a very ambitious master plan.
The whole strategy is what's known in the finance world as a corporate treasury play. So instead of just letting cash sit around in a bank account, a company uses its capital to buy and hold a strategic asset, making a huge bet that its value is going to grow a lot over time. Now, if you're thinking, hey, this sounds familiar, well, you'd be right. BitMine is basically taking a page directly out of MicroStrategy's playbook. The big difference? While MicroStrategy pioneered this whole thing for Bitcoin, BitMine is now using that same aggressive game plan for Ethereum.
And their goal is, well, it's audacious. Tom Lee, their leader, calls it the Alchemy of 5%. The company's stated ambition is to eventually accumulate up to 5% of the entire circulating supply of Ethereum. Just let that sink in. And you know what? They're not just getting started. They already hold roughly 3.37% of Ethereum's entire supply. Think about that for a second. One single company now controls a pretty significant slice of the whole network, which effectively takes all that ETH right off the open market. And their plan really has two distinct phases. Phase 1, which they are deep into right now, is all about accumulation, just building up that massive war chest of ETH. But Phase 2, that's where things get even more interesting. They don't just want to hold the asset, they want to activate it. And that brings us right to Phase 2, MAVEN, which stands for the Made in America Validator Network. The plan, set to launch in 2026, is to use their millions of ETH for staking. This basically means they'll put that crypto to work securing the Ethereum network, and in return, they'd turn their static pile of assets into a revenue-generating machine, earning a potential 3 to 6% yield every year. So with a strategy this bold, you probably think the market would have a pretty clear reaction, right? But what we're actually seeing is this fascinating mix of signals. It's not so cut and dry. First, let's look at the long-term view. As this whole treasury strategy has been playing out, BitMine stock, that's BMNR, has been on an absolutely incredible run. We're talking up over 600% in just the last 6 months. That's a pretty clear sign of major investor excitement. But then you look at the short term. Right around the time they made this latest massive purchase, the stock actually took a dip, falling about 4%. So what gives? Why this big disconnect between the long-term hype and the short-term hesitation?
Well, the reason is that BitMine stock is now completely intertwined with the price of Ethereum. Its fate is so tied to ETH that it trades as what's known as a high beta proxy.
So what does that actually mean? A high beta proxy is basically an investment whose price moves in the same direction as another asset, but with way more volatility. So when Ethereum's price is up, BitMine stock tends to shoot up even higher. But, and this is a big but, when ETH is down, BitMine stock can fall even harder. That recent dip just reflected some broader weakness in the crypto market. Okay, so this brings us to the really crucial question for anyone watching this story. What's the bull case and what's the bear case? We gotta weigh the incredible potential here against the very real risks. The bull case, you have to admit, is pretty compelling. By hoarding so much ETH, BitMine is literally creating scarcity, which could drive the price up for everyone.
Their staking plan promises a brand new, steady stream of revenue. And for traditional investors, their stock is a super simple way to bet big on crypto without ever having to touch a digital wallet.
But the risks are just as clear. That high correlation means the stock is totally at the mercy of crypto's famous volatility. Having one single company control so much ETH also raises some very valid concerns about the decentralization of the whole network. And let's not forget, a huge chunk of their future revenue depends entirely on a staking product that doesn't even exist yet.
So let's pull all this together. What's the bottom line here for anyone trying to make sense of this move?
Okay, here are the key takeaways. First, the size of their treasury. It's a massive strategic bet on ETH. Second, the stock reaction. You have to expect short-term volatility. It's just part of the game. Third, the long-term potential. It is huge if, and that's a big if, ETH's price rises and their staking plan actually works. And finally, the risk profile. It is undeniably high. Success is tied to both crypto prices and their own ability to execute. To put it as simply as possible, BitMine has successfully made itself the premier institutional way to bet on the future of Ethereum. But that tight embrace means its destiny is now completely, 100% intertwined with the unpredictable and often turbulent crypto ecosystem.
And that leaves us with one final fascinating question to chew on. Is BitMine actually writing a brand new chapter for how corporations can engage with digital assets? Or have they just engineered a more complex, high-leverage way to make the exact same bet that any of us could make just by buying Ether ourselves? I guess only time will tell.